20 rupees all the way up to 100 rupees. It came out with numbers yesterday which looked quite good. YD Murthy, Executive Vice President Finance of NCC, now joins us. Mr. Murthy, good morning. Another strong quarter for you. What led to this kind of growth and what's the outlook for the current financial year?
Yeah, thank you very much. Actually, we have gone for a rights issue and that has stabilized our working capital cycle quite nicely in the last 6 months, and we are back to concentrating on growth. And because the competitive intensity has come down to some extent in the construction industry, we were able to bag substantial orders with better margins. Now that is being reflected in our top line as well as in our bottom line. We have done about 8,300 crores of top line for the year as a whole, compared to only 6,200 crores in the previous year. The bulk of this turnover has come from the power vertical, where we are executing EPC contract for NCC Power at Krishnapatnam in Nellore district of Andhra Pradesh.
Okay. Mr. Murthy, that's an interesting point you made about competitive intensity coming down and that aiding margins. You had 8.2% versus 5.5%, and that's a bit of a positive surprise. Do you think the margins can settle at 8% higher than that over the next 2 or 3 quarters?
Yeah, absolutely. In fact, the other important positive for us is there is a margin expansion that has happened both at EBITDA level and net profit level. At EBITDA level, March 2014, our net profit margin was 6.6%, whereas at for the FY15 it is about 7.8%, almost 1.2% increase compared to the previous year. But the improvement in the EBITDA margins is expected to continue, and current financial year, that FY16, we are targeting EBITDA margins of 8% and above.
Okay. Mr. Murthy, can you tell us what the order inflow has been in terms of fresh orders in Q4 in the entire FY15, and how much are you expecting maybe in FY16, or how much of a visibility you have?
We have bagged about 7,381 crores of fresh orders in FY15 year as a whole. Out of that, fourth quarter is about 2,000 crores. And the order book is around 19,320 crores at the end of the FY15. And mainly there is slightly dip in the order book, mainly because of the strong execution that has happened, particularly in the power vertical. But that is not a cause for concern, and we are confident in the current year also substantial order accretion is going to be there. We are yet to finalize our business plan. Our board is again meeting before the end of this month for finalizing the business plan and also the order booking for the year as a whole. The clear picture will emerge after the board meeting.
Okay. Mr. Murthy, if you could just elaborate in terms of competitive intensity coming down, what do you mean by that? Why is competitive intensity coming down?
You see, in fact, if you go back to 2 to 3 years, there was a lot of aggressive bidding that was taking place, particularly in the road sector for BOT road projects, and also to some extent on the other sectors for EPC contracts. And now many companies are having difficulties, and so their ability to bid for projects has come down to some extent, number one. And number two, and more importantly, some of these government agencies, they are putting a condition that if the bidding company is in CDR, that is corporate debt restructuring, they will not be eligible for bidding. So that is giving opportunities for companies like us, some of the frontline companies, without any problems. We are able to take up the orders, and the orders are coming with better margins.
Okay. Mr. Murthy, an update on a couple of issues. One on your BOT road projects that you have put on block, and on your real estate monetization. How are things faring on that front?
We are planning to monetize 2 BOT road assets, that is Western UP Tollway and Bangalore Elevated Tollway. We are discussing with the potential investors. Western UP is looking good. Maybe we will be able to close the deal in the next 6 months' time.
Okay. And what about the real estate monetization?
Real estate, actually we do real estate through our NCC Urban, and we told them that they should be able to generate surpluses and repay the loan taken from the parent company. They are working in the direction. In the current year, they are going to repay about 100 crores of loan taken from the parent company.
Okay. Sir, on a standalone basis for FY15, you did a total income growth of 35%. You spoke about the margin picture. How much more do you think you can better your revenues in FY16 based on the base of 8,297 crores that you did this fiscal?
Actually, we will not be able to generate higher top line, mainly because the power EPC contract, which has contributed substantially to the top line in FY15, is almost over, and its contribution in FY16 will be very less, and therefore we are not looking at top line improvement for FY16.
Okay.
On the contrary, there could be a dip in the top line, mainly because the power vertical will not be able to contribute as much as it contributed last year. Last year, out of 8,300, the contribution by the power EPC is about 3,100 crores. So anyway, as I told you, the board is meeting before the end of this month to finalize the business plan. From then, we will be able to know what will be the expected top line for the current year.
Okay. Mr. Murthy, finally, now that your debt level is down comfortably and it's looking quite comfortable, any rethink on the BOT space, or is that a firm no now? And is that a decision that you're not going to change?
It is not like that. In fact, I refer to the finance minister's speech in the union budget, where he said that the BOT projects in the road construction will be revitalized and revisited. They are planning to tweak that. They are talking about some hybrid model. They are talking of the government agencies participating in the equity at the SPV level. All these things we are carefully examining. If they look attractive, we may reconsider. Of course, we have to go to our board and seek their approval for participating in the BOT road projects. But as far as EPC is concerned, absolutely no issue. We are participating, and in fact, last year we bagged a big order of about 1,600 crores in the road sector.
Okay, so you're open to going back to the BOT segment if things improve over there.
Absolutely.
Okay. One quick question then, Mr. Murthy, before we let you go. What is your current debt on books, and what would the strategy might entail in terms of possibly reducing it? The last figure I had is around 2,200 crores on a standalone basis.
Yeah.
Okay. Would there be any further reduction?
I see. We had the debt has reduced already. FY15 on a standalone basis, we reported a debt of 1,995 crores, which is that is less than 2,000 crores. That is in line with our thinking,
sure.
And it's a good thing that has happened. In fact, we were at 2,800 crores in September 2014, before the rights issue. So that is a good improvement that we have achieved in the debt reduction, and our debt equity also has come down to about 0.6, which is our comfort zone. And the asset monetization that we are planning, if that materializes, maybe there could be some further reduction in the debt.
And would that include your Nelcast power plant or the stake sale?
Yeah, absolutely.
Okay.
Yeah.